and this is after it reached from a shocking fourth quarter, plunging into a 2,329 crore of a loss as margins crumble and asset quality tanks. What went so wrong? Let's bring in Hersh to unpack this disaster.
Well, yes, I'm going to try to explain as to why losses were wider than what the street was penciling in. And in that sense, I'm going to start off with the top line. The NII was a miss. The net interest income was lower. There was some bit of pressure which was already built in terms of that NII number, but it came in even lower than that at 3,000 odd crore. When you're looking at other income as well, that too was impacted because of that one-time knock due to the derivative segment that we saw of around 1,600 odd crore. So that knock also impacting, or apologies, 1960 odd crore, and that knock also impacting the other income number and therefore impacting top line. The operating expenses were also elevated. You had some one-offs which were shifted from provisions to operating expenses. That also impacted OPEX, and OPEX was up on a 7% on a QOQ basis. That impacted overall operating profit, which came in at a loss of 491 crore, whereas what was expected was that it will be operating profit positive for IndusInd Bank. In fact, if you recall, the erstwhile management had actually guided for PAT positive, marginal PAT positive for Q4. That has clearly not translated. We're looking at credit costs, which were also elevated. Asset quality worsened. Your NPA ratios worsened. Numbers will come on your screen so you can have a look. Growth wasn't there. There was a degrowth both in the corporate as well as in the MFI book. MFI book degrew 21% on a YOY basis. The corporate book degrew from 1.7 lakh crore to 1.43 lakh crore on a QOQ basis. So you're seeing sharp degrowth across matrices, and therefore the loss figure was much larger than anticipated. Your net worth compressed by 4%. So from the 65,000 crore number, the net worth compressed to 62,000 crore odd. Again, not looking good.